Like we promised, we do have the management of Anupam Rasayan joining in with us, Vishal Thakkar, Deputy CFO at Anupam Rasayan joining in with us. Very good afternoon, Mr. Thakkar. Thank you so much for joining in with us as always on ET Now. Looking at your numbers, yes, we are seeing a bit of a pressure coming in, whether you look at the revenues, margins of the company, they have seen a decline on a quarter-on-quarter basis as well. Now, obviously, there are factors that are impacting chemical players, and that is in terms of the China dumping. There's an inventory drawdown that is there as well. Could you just give us an understanding in terms of the current scenario that is there in terms of that? And, do you see that impacting your top line and margins going forward as well in quarter four also? Maybe the impact of these situations could continue?
Hi, thank you. Thank you for getting us on your channel. And yes, this quarter has been quite muted for us. But if you look at for the 9 months, we would have been a flattish number. And what you rightly identified in terms of the demand side, yes, demand has been a little weaker. But if you look at from the margin side, I think we have been able to hold our margins in the range of 26 to 28%. However, this time, if you look at it, it is around 27% on a console basis, and on a standalone basis, it's around 30 odd percent. So to that extent, we feel that the margins wise, we are good. Primarily, yes, on the demand side and the growth side. This quarter and the next quarter are looking like flattish growth. This year we should be ending up with a growth in the flat region. But if you look at the 25 onwards, we should see the growth coming back in the first half of 25 and should continue to see the growth journey from there on.
So you are saying that, obviously flattish growth in FY24 is what we could expect, and FY25 better growth, the growth journey begins again for the company. But, you're given a guidance in terms of revenue, I believe, of around 2,000 to 2,500 crores in terms of revenue. Is that something that still remains intact in terms of revenue guidance as well as your margin guidance of 26 to 28% as well? Or maybe, for FY24, that's something that could be a bit of a miss?
No, so FY24, FY25, we have said that we'll be growing at whatever the percentage will be there. But in terms of margin, I think margin, as I had mentioned historically also, that our business continues to be on a cost plus model basis, and hence we are able to pass through all our costs, either it is revenue in terms of raw material or it is in terms of overheads. We have been able to pass, and we believe that continues, and that's the reason you're seeing the stable margins going during the uptick and also going during the downturn of the raw material prices. So margin wise, we should be fine. Growth, we should see coming back in the next year from next year onwards. So that's where I would guide it for now.
Europe has been a big market for you. Nearly 1/3 of your revenues come from that market. But recently, you have been signing a lot of long-term contracts with the Japanese players. So is this intentional shift or are you looking to diversify your revenues? What is the strategy working on this front?
Yeah, so see, that has been a strategy. If you look at it historically, also we have said that we would want to expand from only agrochem to pharma and polymers as well. And on the geography side, yes, there has been a concentrated effort from our side to move beyond only Europe. And if you look at Japan, has been very, very clearly becoming a good market for us. And in fact, even we have set up an entity there, and we have got the people working there as well. And we believe that Japan should become a fairly good contributor to our revenue in near future. Even today, it is double digit, and we believe that it should go further and consolidate the position. It should be in the top 2, top 3 markets for us.
In the first half, around 230 crore rupees of Capex was done of the planned 670 crore Capex. So how much of it has been incurred in the third quarter? Are you on track for this Capex commissioning? And when will the full revenue of this Capex be realized?
Yeah, so if you look at it, we did around 150 odd crores of Capex this quarter itself, and we ended up with a 380 crores of Capex, 381 crores of Capex of that 670 that we had identified. And we believe that in next 2 quarters, we should be able to do the similar kind of numbers and try and wrap up our Capex program by that point in time.
Okay. Also, you have been winning a large LOIs, letter of intents from across geographies, which stands northward of around 7,000 crore now. But last 2 quarters, there hasn't been any much LOI signing. So what is the update? Any updates? Are you working on any new large contract that you will be signing anytime soon?
So let me not talk about the what I'm going to sign and sell, because it's little one. But yeah, we're working on a lot of projects and talking to customers. Even in this quarter, we signed one LOI. It was around 500 odd crores of revenue potential. Totally today, our order book should be in the range of 8,000 crores of order book. And yes, there is a lot of interest. So that's what I'm saying, that the interest from the customers across geography, especially Japan and Americas, has been quite interesting, and that there we can see a lot of buoyancy there.
Right, and Mr. Thakkar, lastly, we just want to understand, obviously you've raised your funds were raised via QIP in the last quarter, and that was to repay your debts as well. But in the case of working capital issue, that's still continuing. Will you have to strategize in terms of taking more debt or anything that you could give us an indication in that terms?
So see, on the debt side, I think we are fairly comfortable. If you look at it today, we've raised around 550 odd crores of capital commitment, of which 270 has come in, and that 270 has been largely used to repay the long-term loans. So by the quarter end, we had done a very limited, but by now we have done enough of that money being deployed, and we believe that on the debt level side, I don't think we need too much of external debt going forward. Maybe whatever is a running businesses is what we're talking about here. So I don't see anything leveraging ourselves, anything going further beyond what we are today, especially unless we take up another large projects, which is not right now in the offing.
Okay, Mr. Thakkar, thank you so much for joining with us this afternoon on ET Now, giving us an understanding in terms of the company as well, how your order book is also looking like, and issues in coming in terms from the China front as well. Thank you so much, sir, for joining in with us.